Hello everyone, I'm Kunal Sodhani from Global Trading Center Shinhan, India, and we are here with another episode of understanding, decoding, and analyzing several currency pairs based on how the domestic and global factors have behaved. So first, let's talk about the global factors today because there are a lot of things to discuss. First, starting with the Fed. We had the Fed policy and as expected, 25 basis rate cut was announced. But it was a tone, it was the statement which mattered the most was the hawkishness, where the anticipation by the markets were of around maybe 75 to 100 basis point of rate cut in the coming year, that is showing 25. But as per what Jerome Powell spoke in the press conference, as well as from his statements, it got highlighted that there is a possibility only of a 50 basis rate cut, and not beyond that, at least at this point in time, considering the inflationary scenarios which can creep out. Plus, they always believe to be data dependent, which they continue to do so. And we had also seen one dissent where a member was against the rate cut also. So that also highlights somewhere the members rethinking or realigning basis on what they are expecting in future. Due to this, obviously, we saw a knee-jerk reaction in the dollar index, which rallied towards 108 levels. We saw euro dollar levels moving below 1.04, nearly going towards 1.0350 odd levels. Broadly, if we talk about the 10-year US Treasury yields, they did rally towards 4.5% plus. So this states that the rates trajectory, the way dovishness was there earlier, it may not persist, and realigning of the rate cycle may happen. If you talk about how the Asian currencies have behaved, if you talk about the South Korean won, Indonesian rupiah, they have weakened sharply. Even the dollar CNH pair, that is Chinese yuan, has gone towards 7.31 levels, near the highs of 7.35. So I personally believe that their weakness may still persist in terms of the Asian currencies, and thus INR may not be sidelined, and the weakness in INR may also persist. Irrespective, we may see some kind of intervention at regular levels or intervals, but it still may not be that aggressive if the Asian currencies are continuing to weaken. Other policies which are important to watch out would be the Bank of England's policy, where we are expecting it to be status quo because the inflationary pressure, particularly in the service inflation, remains quite high towards around 5%. So I think that there will be status quo, and Bank of Japan is expected on a status quo in this policy. While moving ahead, we may see a rate hike from their side, maybe in January or February. So if we talk about Brent crude price and the geopolitical risks, they are still silent at this point in time. This consolidation is seen in the Brent crude prices around $73 to $74 per barrel. If we talk about flows and the Indian equity markets, they in the last couple of sessions, they have taken a huge beating there, and we still believe the overall the inflows which we have seen in this first half of this month, that is December, may go more lower because of the book closing of the offshore entities and companies and hedge funds. So some outflows can be seen, which we have already started witnessing in the last couple of sessions. So flows may not remain as positive as they were in the first 15 days. So it may also impact INR to some extent. Also, imported demand has been back into the Rupee pair because somewhere the big figure 84 or 85 levels now, where some kind of resistance was seen. Now it's obviously taken apart, so imported demand is seen. A lot of paying interest was seen in the forwards, which is a reflection not only of the arbitrage opportunities which were available onshore and offshore, but also the imported demand is coming back. Overall, what's our sense for dollar rupee? We expect there is still space for dollar rupee to further weaken as compared to the Asian currencies, as we have not depreciated that much. We have appreciated maybe around 1 to 1.5%, somewhere in between. So going ahead, I believe there is space till 85 half for dollar rupee. And now positionally the base remains 84.60. That acts as a very, very strong base now. In case if we're able to see lower levels, I think because we have depleted a lot of FX reserve also, both because of the intervention as well as because of the revisions in the FCA, there remains a chance in case if we find lower levels, it would be bought in order to build the FX reserves back again. So that's all from my side, friends. Thank you so much, and wish you have a wonderful week ahead. Thank you.